Good afternoon. We are here for our More Than a Mortgage podcast, Beyond the Loan. Today is episode 35, and we were going to start at 2 o'clock. That was what my live was about earlier. It is 2:30, and
do not even.
I will not take the blame for this happening.
Well,
Jessica.
I have a witness in the room, and it was a lot. It was a lot on you. I've been sitting here.
We had to get things set up and perfected. But what time did you get here?
2 minutes of 2.
2:05.
No, ma'am, it was
2:05 for the record. But anyway, we are here ready to do our podcast. Today, we're going to have a little fun with some mortgage myths and facts. I know, mortgage is fun, right?
Yeah.
The myths and facts. I was going to try to do some tricky things and have we'll have a realtor come on with us. And we could, you both could have held up myth or fact, and that would have been fun. But I did not find any realtor that I could twist their arm because they're all busy out doing showings, and they're in and out here and there.
Maybe they just didn't want to hang out with you.
Well, I did say you were going to be here too, so. So anyway, there are a lot of mortgage myths out there, and we have been doing this with our realtors on Tuesday mornings. We've been debunking these mortgage myths, and we've been sharing them. I think today was mortgage myth number 4 that shared on our social media. So Jess, I have 5 myths here we're going to talk about.
Okay.
And I mean, I can't stump you because obviously you're one of the mortgage experts, but
maybe I'm not on my game today.
So the first one, and this is something that not necessarily people really think, but so let's talk about it first. You need 20% down to buy a home.
Myth.
That is a myth, right? So what do people most of the time, I'll give you my take on it, but first, what do people think most of the time? They need the 20%.
I think a lot of people think that it's old school and it's required to have 20%, or they think that mortgage insurance is hundreds of dollars.
That's what I was going to say.
And that is a myth. We have loans that are 0% down. We have loans that are 3% down, 3.5%. I would say the typical conventional borrower in this day and age does 5%. You don't see a lot of 20%. And I know I have one right now. They have very good credit scores, and the mortgage insurance is only like $40 or $50. It's really not that much money, and I think that is the biggest myth. Well, my parents said I have to have 20% down, or I'm going to pay hundreds of dollars. That is a myth, and that's one of the reasons I tell people, don't listen to what your coworkers and friends, everybody's situation is different. So don't take advice about mortgages from somebody that's not a mortgage professional.
Yeah, I agree. That's the one thing that I would say is they think that, okay, well, yeah, I guess I could do it and not put the 20% down, but then my mortgage insurance is going to be high. And I have another one too where it's like $41. So yeah, good credit, you're not paying that much. No. So don't let that $40 stand between
you and a house.
You and getting a house.
Yes.
Yeah. All right, so myth number 2. I have these written out for us because I want to make sure we covered all 5, but don't look at the answers, Jessica.
Well, don't I have to do myth number 2?
Yes, you can do myth number 2.
Okay. Myth number 2, you must have perfect credit to qualify.
That is a myth.
Good job, Stacy.
Yes. You do not need to have perfect credit to qualify for a mortgage. Not even for conventional financing do you need to have perfect credit. But FHA is an option where you can have a lower credit score and you can still get financing, although people with good credit do use FHA financing. USDA, you certainly don't need to have perfect credit. So I think
it's a myth. However, I do want to say that, if you've had credit issues in the past, that's not going to stand between you and buying a house. But if you're currently in the past 12 months late on payments, that is an issue.
Yeah.
Because if you can't pay the payments that you have right now, you're not going to get an investor to give you a mortgage. They are going to look to see what payments you had late in the past 12 months. And if you're paying your credit cards late and your car late and your bank account is overdrawn, that's a pretty good reason that the underwriter is going to say, you know what, these aren't past credit issues. These are current credit issues. So just keep that in mind.
And also with FHA, your bankruptcy. So if someone
Yeah.
has a bankruptcy, it only has to be discharged for 2 years.
Yeah.
So that's something that a lot of people think, gosh, I've had a bankruptcy, I'm not going to be able to buy a home. But as far as with FHA, that 2 years, and obviously after that 2 years, you have to have established good credit. And you're right, in the past 12 months, that's important.
Yes.
That's what they're looking at. So, you want to get a mortgage and May and June, you had a couple 30-day lates. That's
an issue.
That's also your score is going down for
Yeah.
sure. And keep in mind, your credit score is tied to your interest rate. So the better your credit score, the better your interest rate.
Yes.
All right, mortgage myth number 3. Once you're pre-approved, your loan is guaranteed.
Myth.
Definitely a myth. I'm not sure though many people, because I feel like a lot of people that we talk to are so nervous. Even once we've pre-qualified them and I say, the lender will underwrite it and give you the conditional loan approval, but don't worry, we've done our job pre-qualifying you. But I still think people get nervous and are worried about it.
Oh yeah,
so
all the
I think
time.
they try to be really careful.
Optimistic. They literally will say is this a guarantee? When they come in to meet for application, does this mean I'm good? And explain the whole it's we've run it through automated underwriting. It's got to go to an underwriter. But here's what I'll say about that. If you are being fully transparent with us, you should have nothing to worry about. If you are not being transparent and there's things that could come up that maybe we wouldn't see on a credit report or your pay stub, if you have recurring payments coming out of your bank account, we're seeing this a lot lately.
Oh yeah.
Affirm, Afterpay, Zelle, and they're hundreds of dollars, and you're obligated to pay those monthly. The underwriter, that's going to come up. If you have child support that's not court ordered, but it's coming out of your bank account, every month, and you don't tell us those things, or if you have tax liens or you owe federal income tax, be honest so we can deal with it. Because when we say this, week after week, this stuff will come out. So it's better for us to know up front so we have a path, a plan to get you to closing instead of work. Nobody wants to be partway through this, not the realtors, not the title company, and be oh, this came up. Be honest. And that's where I feel you do have a reason to be nervous if you're not telling the truth.
Well, and all of those things that maybe if you haven't disclosed, but also in that 30 to 45 day period from application. Yeah, we always say, do not do anything that changes your financial situation. If you're going to TJ Maxx and they offer you 10% off, do not get the new credit card. Do not, and I know some people really do heed that, and I'll get calls. We want to get our DirecTV set up for the house so that they can come out after closing and, they're going to run our credit. Is that fine? And I said, yeah, that's fine for them to do. But if the lender gets some kind of an update that you've had an inquiry, we could easily explain what that is, because you're not really getting credit. They're just checking to make sure things are fine. So, but a lot of people even worry about little things like that.
Yeah.
But I think it's do not do anything that changes your financial situation. Your debt, don't change jobs.
Don't go to Home Depot or Lowe's. They will show up. That is opening new credit. So, I do think that, and I think it's important to because we get this a lot from realtors, is this a pre-call or a pre-approve? Or you have to remember, when we're taking information, there's times that we may have a realtor say, I need a pre-approval, I'm showing a property in an hour. We're not getting bank statements and their whole life history in an hour to get a pre-approval. We're doing a thorough credit report. We are asking the right questions. So in my mind, yes, it is very thorough, but until it is through underwriting and you have a sales contract, it is not an approval. And that is just reality.
Yeah. But we know from our track record
and experience
we have we know, we feel comfortable if we've pre-qualified you. But of course, if something pops up that you did not tell us, that's something different.
Oh, is it
all
my
right,
turn?
it's your turn. We have 2 more myths.
Oh, okay. You can't buy a home if you have student loans.
That is a myth.
Really?
So I think most of the time when we are pulling credit,
We
we're
see
seeing
a lot of
student loans. Yeah. And of course now we're kind of in this weird time where there still aren't payment amounts. Like they still keep my daughter who graduated over a year ago still has no payment due on hers, the ones in her name. They still keep pushing the date back. So there's in the income driven repayment plan that just came in, like you can start doing that now. So there's just been some really weird things with student loans. If there's no payment amount on it, for government loans we use 0.5% of the balance. For conventional we're going to use 1%. So we're going to calculate a payment.
And people get like, I will have people that like will go over things and I'll say like these, well, I'm not paying on them, they're on repayment, or if I work for 10 years, it doesn't matter. We are going to use guidelines. We're going to put a 0.5% or 1% because they eventually will come out of repayment. Or maybe you don't put your 5 or 10 years in with your employer and they don't get forgiven. Like, these are guidelines. This isn't like we bend the rules for one person and not the other. It doesn't matter if they're in repayment or not. It doesn't matter. I get like, oh, mom and dad are paying them. Doesn't matter. Yeah. If they're in your name on your credit report, we have to put a payment in there.
Yeah, you're obligated, so we have to figure that. And we don't want it to be where a year or two down the road and they are in repayment and you can't afford it. Yeah, because the payment could be significantly higher than what maybe you even think. So yeah, but honestly, being able to use that 0.5% for government, it makes it affordable. And people are able to buy a home even though they have student loans every day. All right, myth number 5, FHA loans are only for first-time home buyers. We've done a couple social media posts about this. This is a big misconception.
I was supposed to answer that, Ashley. Did you just see that?
I read it and gave the answer.
Yeah, like, I tell you.
Jessica, are FHA loans only for first-time home buyers?
No, that is a myth.
Okay, good job. Do you get asked this? Because I feel like I do.
I do, and I'll have people like even like, oh, well, I was told that, like, again, like, don't listen to people who aren't mortgage experts. They're not just for first-time home buyers.
Yeah.
You can't have 2 FHA loans at the same time unless there are certain circumstances. You know, you live in Florida and you have a FHA loan, you're being transferred to Pennsylvania. There are certain circumstances where you can have 2, but typically 1 FHA loan because it is pretty complicated and there are a lot of things that you have to qualify to have 2. So typically I say 1, and then if it comes to a situation like that, then we would get all the information and go from
like
there.
case by case.
Very case by case.
Basically, yeah. Or one of the others is if you can prove you've outgrown your current home. Yeah. And then but I've never had one of those, and I think it would be very difficult to try to. So they really don't want you to have 2. But most definitely. And what's the we just went over this in one of our realtor meetings. First-time home buyer. First-time home buyer doesn't mean you've never owned a home.
Correct.
In the
3
mortgage
years.
world.
Yeah. 3 years. You if you've had a home in the past 3 years, then you're not technically a first-time home buyer. If it was 5 or 6 years ago, then you were considered a first-time home buyer again. So, you know, we always look at that, and that's why we ask, you know, a lot of different questions. And you have to be careful, because I had one where the person's like, no, I've never owned a home, but they were on the deed. So they actually were not a first-time home buyer because they were on that deed. And then we got all the information. They wound up being on the mortgage, but they weren't on the loan. But that still disqualified them. They were not a first-time home buyer. So again, that goes back to the whole be upfront, be honest, be transparent. So we're not getting into underwriting and like, oh, I forgot to tell you that, or I didn't think it was a big deal.
Yeah, because those things do matter.
Yeah, they do.
All right. Well, Jessica, we've debunked some mortgage myths and hopefully made someone smarter about mortgages.
More in?
I will allow this.
Okay.
All right.
I think this is important, and we're going to talk about this a lot this week. If there's talk that the Fed is going to cut rates next month, does that mean that you just run and refinance, or people are going to get a lot of spam calls? Like, I don't think that people understand that it has to go down a certain percentage to make it worth it. And also, I think one of the big things is if you jump the gun, so you have 7% and now it's 6.5%, and you're getting all these spam calls, and you're like, oh, I'm going to refinance. They might go down another point in the next couple months, and then you've already done it. You've already sucked up your equity. So, you know, I wanted to kind of cover that because I feel like I'm getting a lot of text messages about that. And I see a lot of misleading advertisements about rates are this low. And it's kind of crazy. It drives me crazy. But I just think people need to know that the Fed has to cut quite a few times. Now, there are circumstances where people do have to refinance. I'm not saying you shouldn't refinance if you have to. But if you're refinancing to buy, to get a lower rate because you bought recently, you do have to wait a couple months until it makes sense.
Yeah, and we always recommend you saving 1.5% on the interest rate, because you're going to have a closing costs. There are closing costs with a refinance. And so it has to make sense for what you're going to be putting out for closing costs, rolling into your loan, versus what you're going to save each month. Does that make sense? We can have that conversation with you. I've already had that conversation with people that were reaching out, but let's just go back to last year. Our first rate cut last year was in September, but it was like the third week of September, but the rates, it was already had been baked in the rates by the time the Fed cut the rate.
And by the time they got under application, they went back up.
Yeah, and so once that actual rate cut happened, rates went up after that. All the way through the end of the year. So lenders are already baking in if they think it's going to happen. So
and
it's not like they cut the rate and boom, the next day it's like, whoa, look at the rates.
Went down to 3%. It's not. So I just like people to be aware you're going to get a ton of spam calls. And I will say, and I said this the other day to a customer, like, Stacy and I are not sitting here calling people all day. We don't have time to sit here and call people all day. We don't cold call. We don't spam call. If somebody's calling you all day about your mortgage, they have nothing better to do, or they're trying to get money from you. Like, they're going to charge thousands of dollars in fees and points that they're going to hide. You'll see it at the end or at closing that they're going to add in your loan amount to get you to do that, because they're just sitting there. They're just dialing all day. That is why you should be able to see your lender in person. If that's one thing somebody takes from this, can you see your lender in person? Can you sit across the table from them? Because if not, you really need to think twice. If it's too good to be true,
these big companies, it's about the profit. We're going to go over the situation, and if it doesn't make sense, it doesn't make sense. And there's no way either one of us would recommend someone doing a refinance if it doesn't make sense for them financially. Because I mean, neither one of us are here.
To sleep at night.
To do something like that where you've made a bad decision and it's because of we just wouldn't do that. So even if we have a conversation and we're like, okay, this is where the rate needs to be for it to make sense for you. This is what it'll look like. We're not there yet. We're just not there yet, and we have lists where people's rates are and where we need to start looking to see if we need to start to say
reach
to people,
out to them.
just an email, hey, it might be time to do a refi. It's looking like the rates are going to be at this point. And that's when you want to pull the trigger and decide to do it. So all right, well, thanks everybody.
Thank you.
And we'll see you back in 2 weeks.
If Stacy behaves, you'll see her back.
Jessica may be invited back.
Have a great weekend.
All right, have a good weekend, guys.